and welcome to a brand new episode of Bearish or Bullish. I'm Julie Alexandria here with JC Peretz. JC, how you doing?
I'm doing well, Julie. We were just talking about baseball. The Baltimore Orioles not near the top of the division.
I don't understand. What's the motivation for the hat?
I was wearing it earlier this morning and I didn't feel like changing. I grew up a Baltimore Orioles fan. A lot of people don't know that. I grew up in Miami, and Miami didn't have a professional team when I was growing up in the 80s. But the Orioles would do spring training in Miami Stadium, so I'd go to the Orioles games.
And you just became, you stuck with it.
Well, you know, it's definitely, I was like a Cal Ripken fan, like way back in the day. I was a shortstop. I was a baseball player. Imagine Cuban kid from Miami playing baseball. Could you believe it? So the Orioles were my team, and the Miami Hurricanes baseball team. I mean, they were in the College World Series every year when I was a kid, so they were an easy team, you know, to like, and I would go to all the games. So I'd go to college baseball games and Orioles spring training games. That was like what I would do.
All right, well, they only have the second worst record in baseball right now, so hopefully that hat will give them some motivation. All right, let's get into it. Bearish or bullish? I'm going to throw something out there. You let me know where you stand on the topic. First of all, the CNN Fear and Greed Index. Now, I know that you are not one for media hype. In fact, you pretty much despise it. You've been very vocal about that, unless, of course, it comes to the cover of major publications when it comes to finance. But when it comes to the CNN Fear and Greed Index, this is something you're asked about all the time. So give me the reason why you do not use this tool when it comes to momentum, relative strength. You pretty much have your response on auto send.
Well, listen, for me, when I write about things, I write about books that I like, or wine that I like, or an indicator that I like, or a specific pattern, or maybe a stock or a crypto that I want to trade. Like, usually when I'm writing about something, it's something that I find useful. If I don't find it useful and I don't like something, then I just don't talk about it, right? It's just not for me. But in the case of the CNN Fear and Greed Index, I get asked about it constantly. So throughout, really, since the blog started in 2010, when I get asked about something a lot, I just write about it so that anytime I get asked about it in the future, I just send them a link like, oh, JC, what are your favorite books? You know, JC, what's your favorite indicators? JC, what is, you know, so I've already have it, you know, Fibonacci. So like any real topic that I use on a regular basis, I've already written about it. So whenever I get asked, I have a link to send. But in the case of the CNN Fear Greed Index, it's not anything that I use. It's not anything that I personally find valuable, but I get asked about it a lot. I'm like, oh, hey, you know, there's no bears, right? Everybody's too optimistic. And then someone sends me the CNN Fear and Greed Index. Oh, there's no bulls. Everybody's too pessimistic. You know, why is it? Somebody sends me, you know, right? So the problem, it's not that there's a problem. It is what it is. It's, I don't find it useful. And the reason, and CNN does a nice job of detailing what's inside of that. It's actually 7 components. And a lot of those components have to do with momentum and breadth. They are not sentiment measures that tend to mean revert. Actually, those things tend to trend. So if we're looking for a sentiment indicator, and we have a lot of them, we're looking for mean reversions. And in the case of volatility and the put-call ratio, those are 2 components where they do mean revert, and those do make sense to include in some sort of sentiment composite. But to include breadth and momentum measures like they do, you know, really just, that's data that I don't want in there. So that's why I personally don't find it useful. I know technicians who I have a lot of respect for, and they find it useful, which is great, right? I use a lot of things that they use, that they don't use, and they use a lot of stuff that I don't use, and it's all good, right? So it's all about what you find valuable, what you find useful. And me personally, we have a lot of sentiment data, and the CNN Fear Greed Index is just not on the list.
Well, you gotta go with what works for you. Consistency is key. All right, well, call it the middle child syndrome. Marsha. For those of you who are old enough to remember the Brady Bunch, I sure don't. I'm just reading what's on the prompter. A history of success comes from mid-caps. Why are they so often overlooked?
Listen, you gotta be bullish mid-caps just as a philosophy, right? So it's not like we're buying mid-caps today or shorting mid-caps. Just in general, the mid-cap space is a very unique area because small caps are up to $2 billion in market cap, and then mid-caps historically are between 2 and 10 billion, and then anything north of 10 billion is a large cap. Now, internally, we recognize market cap inflation, if you will. We have trillion-dollar companies now. We didn't have anything near that when they defined this 2 to 10 billion arbitrary level. So for us, mid caps are more like 2 to 30 billion or 2 to 35 billion. And small caps are probably more like up to 4 or 5 billion. So we've kind of created our own definitions. We've changed the rules because we could do whatever we want. That's the beauty of this. And that's what we do. But, my whole career, the old timers always told me, JC, the biggest winners come from mid caps. The biggest winners come from mid caps. I always heard that. And then over time, when I see mid caps working out well, I'm like, man, those guys were right. So I have this checkbox in my memory where I'm like, oh, that mid cap worked again. And the reason is because they've already graduated from small cap. They're already on their way up the ladder, but they're not quite at that large cap level yet. So mid caps can double, they could double again, they could double again, and they could double again, and they're still not that big. So you end up with huge winners. So the point is, don't forget about the mid caps. Everyone's like small caps, large caps. Don't forget about the Jan Brady's of the world.
Exactly. I mean, do you have any favorites that you could pick out right now?
Well, we did really well with a mid-cap steel company. There was a mid-cap realty company. We're shorting Campbell's Soup right now. That's about a mid-cap stock as well. So Campbell's, if Campbell's is below 40, we like it short with a target down near 32.5. So while the philosophy from a mid-cap standpoint is more from a long perspective, looking for stocks to buy, that doesn't mean we can't short them either. Short Campbell's Soup. You know why? Speaking of steel, right? Because, I don't know if this is the reason, but I think, the reason is because the prices are going from the upper left to the lower right. But the high steel costs for a company like Campbell's Soup, right? They got to make all those cans.
All right, let's move on over to crypto. You mentioned in one of your latest blog posts that once again, crypto hits a $2 trillion market cap. Are we finally at the point, do you think, JC, where we are exiting the growing pains state? We've gotten to a point, we've hit our stride here. How do you manage risk when it comes to crypto?
Yeah, listen, we've had some monster winners, like Solana's up like 300-400% just in the last couple of weeks. Cardano doubled in a matter of a couple of weeks. A lot of these altcoins are just doubling, tripling, doubling again, tripling again. They've been absolute monsters. So the question is, how do you manage risk? And I think there's a few different ways to do that. First of all, you want to identify which levels you want to take profits in when you get there, right? This is not just a hodl, diamond hands nonsense. There's an actual strategy where we define our risk, and then we identify targets, and we are disciplined when our targets are achieved. In the case of Solana, for example, our target was 113. We hit that target this week, so we take profits. And then people are like, well, JC, what if I don't want to take profits? I'm like, well, you can do whatever the hell you want to do. For us, I think that's what makes the most sense. And then it sets up a different trade. So in many cases, let's say you want to stay in the stock or you want to buy Solana, we can own it if it's above 113. If it's not above 113, the risk is down or sideways. So we only want to be long if it's above 113 with a target near 180. But now we have a new trade. So that old trade that worked out great, right? That was something else, right? So now we want to be long if it's above 113. Or the other strategy is if Bitcoin is going to go and we're going to make a run back to those former highs near 65,000, Ethereum is going to get back to 4,300. If that's happening, then you're probably going to get some doubles and triples in some of the other coins. So another strategy is to take profits when Ethereum and Bitcoin get back to those former highs. That's the other strategy. I think both make good sense. If you want to be more responsible, stick to the levels. If you're just, if you're going to be a cowboy and, but have a plan. And I think a good plan is to take profits when those two behemoths get back to the former highs.
Do you have a favorite right now?
Yeah, listen, I've liked Cardano for a long time. That's been a mistake, right? Not a mistake. We made a lot of money. It was fine. But if I would have had the same exposure in Solana, that would have been way better. But listen, we've liked Solana. A lot of our clients have been in it. We've been recommending it. Me personally, I've been in Cardano. I still like it. If we're above 2.5 in Cardano, 100%, stay in it. And then also on the Solana front, the Solana has to store all of their data, and they store it in Airwave. So the bigger Solana gets, the more Airwave they need to buy. So it's like a derivatives play on Solana. By the way, it's something like that. I'm not like Mr. Expert blockchain guy. So just to be clear, if I sound like I know what I'm talking about, I do not. This is how it was explained to me, which is good enough for me. I'm just looking at price anyway. I just find it interesting that it's a derivative play on the Solana. And if, so it's something to look at, right? And if we're above the former highs, which we are, it's a big base. And if you like Solana, that's a nice derivative play.
Okay, well, I know you may not be an expert. I know you don't call yourself that, but you certainly have a breadth of experience. So if you go back to, say, 2017, that was the first time that I heard about Bitcoin. Actually, it was Howard Lindzen who was urging me to get into it back in 2017. So go back to 2017 till now. What would you say is the biggest lesson that you have learned in crypto in the past few years?
There's a few. We're not talking about a situation where you can make a 30% gain in Nike or even an 80 or 100% gain in Nike. We're talking about 10, 20, 30, 40 baggers. We're talking about 100 times your money. So we're talking about two completely different types of risk versus reward propositions. Because in other cases where you need to be in the derivatives market to get that sort of leverage, there's a ticking clock where you're losing premium. So this is just an interesting way to own equity and have just a massive amount of upside. That's one thing. We were joking this morning. Straza was like, oh, I was looking at some old statements of, when I sold Ethereum at 300 or I sold Bitcoin at 4,000. That's just what things were back then, right? I did the same thing. I traded it back in, 2014, 2015, 2014 is when I first got wind of this. Also through a Howard Lindzen event. No surprise there. Shout out Howard. And then what else have I learned? I've learned that, you're going to get massive swings. So if you can handle that and you could stomach that, I can't. I'm not like one of these guys with a strong stomach that can just withstand a 50% drawdown in my portfolio. Like I can't handle that. So I don't allow for that. So because I can't handle that sort of drawdown, I'm more disciplined with taking profits, and that might limit my upside in certain cases. I've also learned, diversification back then and diversification today are different, right? You're getting less correlation between coins when you had higher correlations earlier on when there were fewer coins. So that's interesting. You can be in certain cryptocurrencies that are working very well and some others that you own aren't doing a damn thing, right? So the correlation is less, if not non-existent. I shouldn't say non-existent, but relatively speaking, it might as well be non-existent compared to what it used to be.
Absolutely, yeah. There's so many more to choose from now, depending on where your interests lie, of course. Okay, let's do a little wine advice because you're the wine man. When you think of tacos, you think of San Diego and you think of a Mexican lager, say a Estrella Jalisco or a Pacifico, a Sol, maybe a Modelo. But let's talk about wine with tacos. How does that work?
Well, listen. With any food, there's a wine pairing, right? It's just what it is. Tacos included and anything else. And you want to know something? And we're getting complaints, Julie, that I've been slacking on my wine recommendations. Literally, multiple complaints a week coming in that we're not. That's the true story. So here we go, guys. You asked for it. You want more wine. So yeah, listen, tacos. If you're gonna go just standard stuff, maybe like an al pastor or a carne asada, like you can just go straight Zinfandel, Dry Creek Valley Zin. Because when I think barbecue, and tacos are essentially a barbecue, depending on what you're doing, I think it's Zinfandel goes well. Also champagne. Listen, you can pair champagne with anything. And by the way, for you guys listening out there, if you're ever like stuck and you don't know what to pair something with, you can always pair it with champagne. Champagne goes with everything. So definitely tacos, especially spicy tacos. I like the champagne there. If it's less spicy and more barbecue-y, maybe you go with a Zinfandel. But I'm gonna throw your little world there for a spin. Where's your chicken taco game at? Are you eating a lot of chicken tacos these days?
Yes, pollo asado. Absolutely.
So if you can get a nice fried chicken taco with some lettuce and maybe some like queso crema or something like that for the top, a nice vino verde or vinho verde, as the Portuguese might say it, and you're gonna get a nice slightly sparkling wine. It's not gonna set you back. You can probably get a bottle for like $12. So a nice white Vinho Verde would go real nice, or maybe like a Gamay would also be very nice. So like a Beaujolais Cru would go nice with something like that. And then what other tacos are you eating?
Well, big here in San Diego, of course, you've got the fish taco, you've got the scallop taco, you've got the shrimp taco. So for a pescador taco, what would you go with?
Albarino. You know why? Because I like because the Albarino, they leave it on the lees, right? You can also go with a Muscadet also, right? A Muscadet or an Albarino, because you're going to get the lees, right? So they leave the wine on the dead yeast cells in Nantes, where they make where they make the French style of wine there on Lise Muscadet is in Nantes, and they do that there. And then in Spain, they do it with Albarino, and they leave it on the Lise for a while. And it gives it that, more, that creaminess, that viscosity, the biscuitness that you get from the Lise. And it goes nice with fish tacos.
A cornucopia of options, just a plethora of choices. Thank you so much, JC. Always a pleasure and always very educational. Now I want tacos.
Yeah, we're doing the best we can, Julie. Doing the best we can.
Thanks so much for checking out another episode of Bearish or Bullish. Be sure to check us out at allstarcharts.com for so much more. Thanks for watching.
Muscadet, also the pairing for oysters.
Ooh. Did you do an oyster taco? That'd be weird.
The Loire Valley lets out. It's the Delta, so it's like the New Orleans of the Loire Valley.
Ooh, so there's a lot of minerality.
You get a ton of, yeah, for sure, 100%.
Right?
Yeah, you get that all the way at the end. And you're gonna get your oysters with your Muscadet. That's a classic pairing for oysters, is Muscadet.